Hello students of class 12. Today we will learn how value of output in time of estimation of national income. How value of output leads to the problem of double counting. In output method of national income accounting is a challenge to us, because there is every possibility of double counting if you do mistake in classifying goods. Goods produced in the economy are of two types. Some goods are called intermediary goods and some goods are final goods. Intermediary good means these are the goods produced and sold to another producer. So these goods are further processed and new value is added to them. These are resold. There is a addition of value and these are processed. All these are happening when one commodity is produced and sold to another producer. These are intermediary goods. In time of national income accounting, we should not consider the value of intermediary goods. So we will consider only value of final goods, which are directly sold, which are meant for final use, which are sold to the consumers or sold to the producers and used as durable use producers goods, not processed in the production system. So I repeat, to avoid the problem of double counting, we will not consider the value of intermediary goods. We will only consider the value of final good. This is why the concept of value of output is not taken into consideration in time of national income accounting. Value of output means we will consider the value of whatever produced in the economy. But if you do not separate the value of intermediary goods, that will lead to the problem of double counting. Now, to make it clear, here is an example. I think it will be helpful to understand. Suppose three commodities are being produced in the economy. One farmer is producing wheat, worth rupees 100, value of wheat is 100, and farmer sells it to the miller. So whenever one producer, farmer, is selling it to another producer, miller, obviously it is not becoming final good. Wheat is here intermediate good for the miller. Miller, with the help of that wheat, producing flour, and value of that flour produced is 150 rupees 150. Now miller sells it to the factory. So again, one producer is selling it to another producer. So miller sells flour to the factory for the production of bread. So factory is purchasing flour. Flour is intermediate good for the factory, and with the help of that flour, factory producing bread. But factory is selling it to the consumers. Bread is not intermediary good. In this example, bread is the final good. We want to say, in time of national income accounting, when you are following output method, consider only the value of this final good. Rupees 200 is the value of final good. Don't consider the value of intermediate goods like wheat and flour. If you estimate value of all goods produced in the economy, then value of wheat 100 plus value of flour 150 plus value of bread 200, total 200 plus 150 plus 100, 450. It is not the actual production in the economy. You are getting exaggerated result because of double counting. As because you are not classifying the intermediate goods, you are considering the value of intermediate goods and you are in the trap of double counting. You are getting a wrong result, exaggerated result, 450. No, actual production in the economy is rupees 200. Value of bread is the final good. Only this is the value of output produced in the economy. Now the question is, how value of output leads to the problem of double counting? Why, if we consider the value of wheat and value of flour along with bread, why there is a problem of double counting? Notice carefully. Value of wheat 100. Sold to the miller. Miller with the help of wheat producing flour. Value of flour is 150. Why the value is becoming 150? Value of a commodity depends upon its cost price and the value added by the farmer. Its cost price is 100, value of wheat is 100, and extra value added by the miller is 50. He has transformed wheat into flour. So for this new creation, value added by him is 50, and the result 150 is the value of flour. Now this flour, rupees 150, is sold to the factory with the help of this flour producing 200. Why 200? Because its cost price is 150 and value added by him 50. Now, this 150 means what? 150 is the value of flour. Value of flour is cost price to the factory. 150 means 100 plus 50. Within this 150, 100 is the value of wheat and 50 is the value added by the miller and 50 is the value added by factory. So if you consider value of wheat, value of miller, value of flour and value of bread, that means you are considering value of wheat 3 times. Value of wheat 100. And within value of flour, again value of wheat is coming. Second time you are accounting value of wheat. Again when you consider the value of bread, 200 means 100 plus 50 plus 50. This 100 is the value of wheat. So 3 times you are including value of wheat. Value of wheat here, value of wheat here, also value of wheat here. Similarly, value added by the miller is 50. Again, value added by miller is taken into consideration. In this way, we are repeatedly counting value of same commodity. This is the problem. This is why we say, don't consider the value of intermediary good. Here, value of intermediary good is wheat and flour because these are sold to another producers. Don't consider value of these 2 intermediary goods. Only consider value of final good 200. Otherwise, there will be a problem of double counting. So, to avoid the problem of double counting, there are 2 alternative ways. Number 1, only consider value of final good. Here, value of final good is 200, value of bread. Bread is the final good. Consider this. Or consider value added by every producer in each stage. Value added means sell price minus cost price, value added. Here, wheat value 100, nothing mentioned about the cost. So its sell price is 100, cost price is 0. Value added by the farmer is 100. Here, sell price is 150 and cost price is 100. So 150 minus 100, 50 is the value added by the miller. And here, cost price is 150, value added by the factory is 50. So this is value added by the factory. So only consider value added by each stage. Here, farmer adding value by 100, miller adding value by 50, factory adding value by 50. So 100 plus 50 plus 50, again 200 is coming. So either consider value of final good, you will get 200, or consider value added in each stage. Here in this stage value added 100, second stage where the miller is the producer, value added 50, 100 plus 50, and value added by factory is 50 plus 50, total 200. So I repeat, we will not consider the value of output in time of national income accounting. Why? Because value of output considers the value of intermediate good also. If we include the value of intermediate goods, that will lead to the problem of double counting. So what are the alternative ways? Two ways are there. Either consider value of final good or consider value added in each stage. This much today. Thank you all.